Right now, we're looking at a multi-strategy, right? Let's hit on the digital asset aspect. There's ways in the economy that you can supply digital assets as liquidity and get rewarded back in other tokens and basically get yield. So a portion of the portfolio will go to those strategies where we provide liquidity and in return, we're getting rewarded. That can range all over the place from 10 to 30%. And then another portion of the portfolio will be allocated to professional funds that we know in the space and have a relationship with that cover certain areas that we don't cover. And then we'll also go towards investments that we build personal relationships with project wise, like startups, when it comes to the exchange or that infrastructure layer. And then a portion of infrastructure tokens will be supplied again for liquidity and receive staking rewards for securing that network, which has an annualized yield built into it. So basically, like with a lot of the layer one blockchains, right? You can provide liquidity, you can take your tokens and secure the network. And in return, you basically get tokens back as we'll call it like a dividend.